Ladies and gentlemen, it's time for our first panel discussion of the day based on analytics, splicing data to generate alphas, for which I would first like to invite our moderator on stage, please. Well, Mr. Manoj Agrawal, once again, Group Editor, Banking Frontiers. Let's welcome him with a huge round of applause. I would now like to invite our panelists on stage, please. Mr. Markandey Upadhya, Chief Data and Analytics Officer, Piramal Capital and Housing Finance. Mr. Mohan Sushantam, Chief Data Officer, Vivriti Capital. Mr. Virendra Pal, Chief Data Science Officer, LenDenClub. Mr. Subrata Das, Chief Innovative Officer, Agrawal Capital. Mr. Arihant Jain, Head of Data Science, Analytics and Product, IIFL Finance. And Mr. Ratul Paul, Chief Data Officer, Ecofy. Ladies and gentlemen, let's have a huge round of applause for all our panelists. And now, Manoj sir, over to you.
Thank you, Melanie. So, good morning. We have a nice, large panel discussion. I think everyone has shown up because you know how it is that people get stuck for some reason or the other. Murphy's Law. But Murphy has been kind to us today. I'm happy to have all of you on the dais with us. And thank you all for coming in early in the morning. People kind of struggle and come aaram se, fursat se. But I really appreciate all of you coming in early. And I think you're going to catch a lot of the good stuff that we're going to discuss today. So I have a few questions for our panelists, and then we'll get into an interactive discussion. I want you to ask them questions. I want you to ask the audience some questions or pointers. Okay? So my first question is like this, that analytics is not something new. It's been around for a while. Okay? And mostly it has been analyzing traditional data, whether it's financial data, whether it's employment data, whether it is business data. But in the digital world, we have a whole lot of this digital interaction data. And a lot of it probably includes things like your browsing behavior, when you're visiting the website, what parts of the website you're looking at, where are you clicking, where are you spending how much time. Same thing in the mobile app, right? And nowadays again, same thing on some kind of chat, right? In whichever device that chat is embedded. Now this is non-traditional data, right? And lots of companies, for example, Amazon and Netflix, are mining this data and making gold out of it, literally making gold out of it. So my question to all of you is, if you can briefly say, what do you think are some of the challenges in analyzing this? Because the traditional knowledge of analysis is missing. The type of data is new. The type of data is evolving very rapidly. My account balance at the end of the day, what it meant today, what it means today, it meant the same thing 5 years ago, it meant the same thing 25 years ago. But browsing, the interpretation of browsing and interaction data perhaps might be changing as we move along. So how do you see yourself creating value out of this analysis? What challenges do you face? And what is the expected ROI out of all this? We know what kind of ROI Amazon is getting. But what is the kind of ROI you are expecting? And like anyone to start, no, I don't want to point a finger at anyone. This is a generic question to everyone. So who wants to kickstart?
So I had opportunity working with this SMS data and working with the cookies data, the what is the customer behavior. So I think when we mine that data, yes, it's unstructured. SMS data, not really in a structured form, and we need a lot of technical capabilities to process that. Now, the value part is, so in lending, one big part is the bank statement. And when we try to get the bank statement, there are a lot of drop off. There is a lot of challenges to process that data. Now, SMS data can be a good proxy to that, because in SMS, at least in India, we get every time you do a transaction, we get credit, debit, balance, the full information.
Right.
And along with that, so you can literally build a proxy bank statement that you can get, that you get through the other partners after doing a lot of sophisticated processing of the bank statement. You can get that simply from SMS, and people hardly delete any SMS. And I will actually get to know kind of what is your spending pattern, what is the salary or credit you are getting. Along with that, I also get to know like where you are spending. Are you spending? What is your weekend spending pattern, or what is your e-commerce spending pattern? So that how it adds value is I don't need customer to ask for a bank statement and need a credit team to process that bank statement. Rather, as soon as customer downloaded my app, if I can get that data in and I process that, in seconds I generated his proxy bank statement and I make him eligible, or I take the decision in split second.
Sounds good. Okay. Yes.
So there are various types of alternate data or non-traditional data which we are talking about. Okay, but we also have to figure it out. Like if you are going for 5,000 ticket size of loan, you cannot go ahead with all sort of alternate data. It will not be feasible, or it will not be very good for the ROI perspective. So it's very much important what kind of pattern you want to capture, what kind of behavior you want to see in the customer. Okay, for example, people who is much more indulged in gaming games. Okay, and that information is coming from their app and all those things. So are you going to make any insight of it or not? Because all these things are very much subjective, because data is there, it's getting increased, it is very huge, or people are processing that data. So all those processing, churning will involve cost. It's not also about sourcing those data points. It's also about basis your ticket size, what data point you want to choose. Okay, data point will definitely make sense, but if you're not getting the right value out of it, then you have to choose selectively your data and then decide what kind of behavior and pattern you want to choose.
Okay, that's interesting. Yes.
So, see, 2-3 things are more important before jumping into the data. First thing which is important is, will I acquire data only legitimately, or
Okay.
what is the the legal framework? What is the framework through which I will acquire the data? Second, I see analytics all the time, and generally analytics is a very central office oriented function, in the sense people make very fancy PowerPoint presentation with a lot of good insights. But until unless that analytics gets packaged into some API and get consumed into some decision making process and get used widely, it's useful for people to know, but not necessarily it will make any ROI.
Okay.
So that is the second point. Third point is not just acquiring the data. It's a lot of hard work. When you are using the alternate data, it's not established data. That the bank average balance works. Higher the average balance, lower the risk. It is established for last 20 years. Or that the vintage higher works. That someone has a home loan, that will be a lower personal loan risk customer. These things are established. They do not change the trend. But this alternate data is very new data. You have to not first just invest in just jumping to consume it. You have to first get it, store it at the time of application, see that how that data actually behaves with the target variable which you have. A lot of these new variables keep changing their trend. What was effective yesterday may no longer be effective today.
Is there a name for describing this kind of analysis?
all these variables, suppose you get a alternate data that someone who is purchasing through e-commerce is low risk. 4 years back. Because
Okay.
that person might be using credit card, debit card to do that e-commerce purchase. But today, if everyone is doing e-commerce purchase, that variable may not have that much significance.
Right. Okay.
Or I'm just saying that, like, you'll find that, the retailer A, if someone is purchasing with e-commerce retailer A compared to e-commerce retailer B, their risk differential is there because there is a perceived, like, the primeness that, the prime people goes to this portal, little bit non-so prime, but those dynamics keeps changing. So it's a lot of hard work and investment, and not just one time, like, brilliance of, like, creating some nice PowerPoint presentation which like, create the differentiation. So the broader point I'm making is analytics is a very, very useful tool. You have to have a very strong framework, what data you'll use, how you will use. You have to really invest heavily into it, and just having analytics function doesn't help. You have to have equally good take function, because if you cannot create your analytics put into API which can be consumed by tech, because a lot of tech teams, if you create an API, they will say, I cannot consume my server or my system will become unstable. So it's of no use. Like, you, no matter how good a food is cooked, if it is not being eaten, it is not, being healthy. So investment in tech, investment in analytics, having a framework and really being invested is the way to make benefit out of it. Otherwise, like, it will be all fancy PowerPoint presentation.
Yeah. So I guess a lot of good thoughts. I just wanted to take a step back, right, and think, right. So I think analytics as such is something I heard that there is a model in 90s also, which banks have created, in 2000s also, like analytics model for underwriting and all that, right? So if we see this pair, right, what is most important for any NBFC or anyone in this space is risk underwriting, right? That is core thing, right? And then other verticals can come in terms of, let's say, collection models, marketing models, and everything, right? And fundamental of risk underwriting, as you all are here from NBFCs, you know much more than me probably, is, intent to pay and ability to pay, right? That's where we kind of talk about, right? Ki CIBIL dekh lo, intent pata lagega, right? For checking and ability, you see banking. That's how the whole universe of fintechs, NBFCs, banks are working. Now we are talking about the third layer of alternate data, and this is something not new. We are talking in 2023. I remember when I was with RBL Bank in 2015-16, I used to use the alternate data. Now, what point I am trying to drive here is that, of course, this data points, whether it's an SMS data or a digital footprint of customer or social media, anything is helpful, but all this is helpful if this taken in a context. Like, for example, and I think there are a lot of points which was being said on the forum already, that if you are giving a small ticket size loan of 5,000 to 10,000 rupees average ticket size, then you may not need a banking. Then you are very good with, let's say, the personas you can create. So one more angle which I think is something which is evolving now is persona-based underwriting. And when I say, like, intent to pay, ability to pay, and then there is third more is called persona-based underwriting. And when we talk about persona-based underwriting, I think this all data points comes into the picture, and not only from a risk point of view, but also from a marketing point of view. I will say a very simple example. Let's say there is a customer who is having a very influential profile come on your platform, right, for taking a loan. And if you know that that guy is an influencer on social media, or let's say that guy is of a premium category, whatsoever documents you are asking, you have to minimize it, right? So if you don't know that at the onboarding time, if you are only looking at, like, what is the risk of this guy, of course, that is the core to NBFC business. But if you try to figure out the persona at the acquisition time using all these data points and try to tag that, okay, this guy fit into this persona, then all your digital journeys, all your communications, all your experiences could be, managed well. But again, this all comes with the structure where a lot of technology help is needed, because all these are not easy thing. As I think rightly mentioned, that I can, go ahead and present it to management that I can do this, I can do that. But to enable it, you need a lot of infra. And for enabling this infra, you need a good tech teams, a good cloud systems, and then of course a team overall to manage this. But definitely, I think the way the whole industry is changing, a lot of people are focusing on personalization and persona-based underwriting, and I definitely look forward to see how this evolve in a year or two. Yeah.
Okay, that sounds good. Subrata?
Sure. A lot of interesting points are made. I will add a couple of perspectives to the question. I come from Ugro Capital, and we are an SME lender. SME lending in India is one of the spaces where it's considered to be highly physical. At least 10 years back, considered to be highly physical because of the heterogeneity and the tremendous amount of nuance. It's quite impossible to do without a physical touch. But even in that kind of an industry, we have seen so much advancement with alternate data and everything.
Okay.
So I think clearly one trend is this is growing. I think today a large part of SME lending, of course, we are trying to do that ourselves, but even others, the role of alternate data and what it can do to solve the credit gap of SMEs in India, that has set in, that is emphatically present today. That's one. Second is in the way things are progressing. I think 5 years to 10 years back, we were talking about converting a process to a digital process or reducing the use of paper. But fast forward to today, especially accelerated in the post-COVID world, we are saying how to create sophisticated decision and enhancing the quality of decisions, not just making it paperless.
Okay.
That's one. I think this naturally leads to the ROI question. And I think because of the advent of, and this is where I think how to measure the ROI, it is so much important today and it is well facilitated because today's operations are technology-driven journeys, workflows, which is why when we create a product or a solution, we always know that who's the party who benefits and how exactly it impacts his operations or in the way he does his work day-to-day basis. For example, if somebody has to reduce stat, that is measurable. If somebody has to collect a little more money, that's measurable. If somebody has to reduce the, or improve the performance or increase the approval rates of his loan business, that is measurable. And I think the fact that the processes allow these metrics to be measured is one of the main points which will drive ROI in these initiatives.
You want to add something?
Yeah, in fact, most of the points have been made. I would just like to add one thing is from an ROI perspective. And I'll give you a discussion I had with my MD and CEO when I was talking to him and my KRAs were supposed to be decided, right? And how do you measure the efficiency of data team? Should we measure the efficiency of a data team by number of models they built, the number of dashboards they delivered, the kind of data activities they did? No, right? I mean, the efficiency or the productivity has to be measured in terms of business outcomes. And then we started deciding on what kind of business outcomes data team can drive. And they're very simple, right? I mean, for any business, the business outcomes is you either help me drive my top line or you help me improve my bottom line. Right? So basically I have X set of customers, you help me retain my existing customers, good customers, you let the bad customers churn away, and then you help me get better, good customers from the market. Right. So that's organic growth. So, and that's how a data team's KRA and the ROI of data should also be decided, whether it is helping me in solving these three problems. Can I get better customers? Can I retain good customers? Can I identify not so good customers who we are okay to churn away with, right? So any data activity that we do, it can be something as plain vanilla as building a dashboard or building a propensity model or building a credit risk model or building a churn analytics model. Anything that we do has to hit three different things. And how we measure it, there are n number of ways to measure it. I mean, something can be measured, and if it is a digital workflow, you can do a lot of experimentation, you can do a lot of A/B testing, you can do test control and do all those things, and you can measure the delta, and then delta can be attributed to whatever the data team delivered or did. So that's how we measure. Even let's say alternate data, right? If I'm using alternate data, is it helping me improve my conversion rates? If it is not, I would not use alternate data, honestly.
So what is it? Are you finding the benefit?
Right now, again, like Subrata said, I'm not into, Vivriti Capital is not in B2C lending, it's in B2B lending. I haven't found a lot of value in alternate data as far as B2B, because there is a lot of unexplored structured data available in the market. A lot of things on EPFO, a lot of things on MCA, a lot of things on money control. So there are a lot of things that are available which I can easily consume and use instead of delving into unstructured, into alternate data.
Alternate.
See, I don't think the question is data is helpful or not. The question is when data is helpful, because data has to be helpful. So if someone is a bureau head, someone has a bank statement, someone has GST, account aggregator, do I really need to go and get alternate data for him? No, I mean, if that is the kind of lending you want to do. But if someone is no hit, I mean, the ticket size doesn't allow you to ask for bank statement. In that case, I mean, like, data getting from geolocation or like, alternate data to make your underwriting process efficient. And it's like, it's very beautiful. Like, I mean, credit models page, like, we are talking about ROI. ROI is not even questioned because, like, I mean, having a, a small ticket size, 7, 8, 9% kind of like, the credit cost, very small ticket. I mean, if you see bureau data, it will be 7, 8, 9%. If you are having like, 3, 4%, like, very small ticket credit cost, you are talking about 5% high churn, like, you can make a lot of money or save a lot of money. And in those scenario, customers, I mean, the journeys are not amenable to asking for a lot of data.
Correct.
They may not be bureau head. And they are actually, it's not even a choice. Like, you have to get the alternate data or you have to get the data to make decision. I mean, you cannot make decision without data and there is no human involved. So it's not a choice. It's just that you have to ask where the data is useful. It's not about like, is it useful or not?
So many NBFCs, alternate data might be their main data actually. If they're serving that kind of customer segment, illiterate, maybe in a rural area, whatever, So actually I want to now, since many of you have talked about ROI, for NBFCs, one aspect is to make the transaction profitable, but another business objective for NBFCs is definitely growth. I think this is a sector like fintechs. If you don't grow, you're dead, kind of. You cannot remain stagnant. Otherwise, you'll be eaten up. The market will go elsewhere. So how do you see analytics empowering growth? Not just transaction verification, whether it's a loan or collections or whatever it is that analytics are used in, but to drive the top line at a meaningful pace. How do you see analytics getting used for that?
So
let's go in the reverse order so that maybe you can start with you and then.
Sure. So I'll again, Vivriti Capital is an NBFC which lends to mid corporates. Right?
Okay.
And we have identified our total available market size in India is, let's say, close to 15,000 companies, mid corporate companies, right? Now, let's say there are relationship managers whose job is to be on the road, meet these companies, identify opportunities, and then figure out what kind of product can I pitch to them so that they end up becoming my customer and I grow my top line, right? Now, what does this happen? I mean, before, and these are mid-corporate, these are smaller companies. They file their financials with a little delay. Some of them may not file that regularly. There is a lot of data sitting around in different parts. There is a lot of research that they do before they reach out to the company to figure out whether they are good for me and then what kind of product should I pitch to them. Now, typically, a sales team will be most productive if they have everything available to them at their fingertips and they are on the road. So if the sales team is spending most of their time on the road, meeting customers, pitching to customers, is when their productivity is the highest. Now, how the data team can enable that? Data team can enable that by automating a lot of things that they do manually. Let's say something like data entry, analyzing data, creating charts, giving them insights that, okay, this company is looking like this, so you should go and pitch this. Then they do a lot of research. They do a lot of Google search. They go to different websites. They do a lot of financial analysis, P&L analysis, just to see whether we can lend to them or not. Can the entire process be automated? Yes, right? So what we can do is, let's say there is a sales guy who has identified a company. They just have to punch in the SIN number of the company in let's say an application, and they get a 360-degree view of everything related to that company. So this company operates in this sector. These are the ratings. This is the rating rationale. This is the revenue. This is the EBITDA. This is the cash flow. this is the performance of the sector, this is the macro view of the sector on the basis of whatever we have seen, and everything is there in front of the sales rep. And what they have to do is they have to use this information and go and meet the customers. So initially, if they were meeting 2 prospects every day, because they were spending rest of their time sitting in office and doing all that research. Now, because I've enabled them with just data availability, and I'm not even talking about modeling and all the exotic things that data team can do. I'm just saying I've made the data available in an easily consumable fashion to these sales reps. And now what they can do is they can end up meeting 10 companies, let's say not 10, probably 7 or 8 companies in a day, right? And that is how I've increased the productivity. With the same sales staff, probably I can end up getting much more clients. So that's how I've increased my productivity. So that's the
Salesforce empowerment through analytics is the driver.
And through simple data availability, getting every data at one place in an easily consumable fashion, and then sharing insights.
So it is a wide variety of data to drive the productivity of the sales team and Salesforce. Okay, sounds good.
So I want to add one more point on top of it. So yes, of course, getting all the data points available, and on top of that, you can take a informed decision, and you can make the sales more productive. Rather chasing every customer, you know what to chase and get big ROI. I want to add just a simple machine learning use case on top of it. So where, looking at historical data and who converted, who did not convert, we build a simple, not even a super sophisticated machine learning, but even a simple machine learning algorithm. Now there is something called a capture rate. So how it goes in this kind of products, this kind of algorithms, in top 1/3 actually converts, actually gives 90% of revenue. Rest 2/3 actually junk. And top 10% kind of gives 50% of revenue. Top 5% gives like 30% of revenue. So if I just build not a rocket science, but a simple machine learning algorithm on top of it, looking at historical data, and I just put different use cases or different intervention or action points for my sales team. So if this customer comes in top 5%, and the probability to convert, give him a relationship manager experience.
Okay, that sounds interesting.
And maybe after first 1/3, I don't even engage my sales team after those leads. I pass those leads in the self-serve journey.
Sounds good. So you're doing a lot of optimization. Sounds good.
So one point from my side, see growth can be derived at any stage of loan life cycle. Okay. I am coming from LenDenClub, where everything we are doing is digital. Okay. So all the marketing, campaigning, everything is digital. So the way we are targeting our customer, it has to be very much precise. If suppose I am targeting customer at wrong area or at wrong time or at wrong age group, then it will not give me the right set of customer. Eventually my funnel will not increase. So the right set of targeting and that personalized targeting. Maybe a person who is more than 25 age to 35, living in a metro city or 2-tier city, and traveling back from office to home, these people will be the right people for me. But if I don't know that these people are right, or if I don't know how to target them, then it becomes a problem. Okay. So eventually your marketing cost always going to be bigger and bigger. But if you are going to rightly target and personalizedly campaign, if you send to those people, you will get the funnel improvement at the very beginning. At the underwriting stage, suppose you have got all the data, but eventually after disbursing loan, you could figure out that person is not contactable. It's very important, right? I got very good banking, I got very good CIBIL score or CRIF score, anything. But I'm not able to contact him for the first payment. Then it's a problem. So am I able to identify that at the underwriting stage? That's an important thing. Eventually, if I am able to do that, then I can increase my profit. I can maybe lend to someone else who is going to give me the better ROI. And importantly, if as an analytics team or AI team, we are able to identify the right segment, we are rejecting a lot of people. Okay. So if we are rejecting a lot of loan application, if we are able to find out few people from them whom we can lend, that's also additional growth which person can find it out.
So lots of small opportunities along the customer journey, along the
Right.
The entire
And
journey.
eventually creating a right product also. Maybe
Oh, okay.
we are targeting salaried people, but what if those people who are not salaried or self-employed, can we create a such kind of policy or model that we can lend to them? That will give additional end of revenue. So all those things that analytics team does and try to think what in actual process what they can bring the efficiency and what additional process they can bring which can become the additional business revenue.
If I take it on a lighter note, you're saying that you can find the needle in the haystack using analytics, or that deep you can drill. Arihant, you want to add something?
Yeah. So I think one of the use case probably on the growth side, while we can look at the internal data sources, now there are a lot of fintech companies in this space who is providing you insight around that pin code, right? That how many malls are there, right? How many shopkeepers are there? Is this a lot of residential societies are there, right? And according to your product, right, you can always go ahead and use this data. Like in India, roughly there are like 20,000 pin codes out there. Close to 20,000 pin codes. You can map all these data points, right? Marry with your data sets, what customers you have acquired, and get a lot of insights at a very granular pin code level, and how this can help you. Like a lot of like a lot of our journeys are digital. We do a lot of performance marketing campaigns. We put money on Facebook, Google, and all. Now all these insights could be helpful to your marketing team, which we keep on feeding into them that okay, this 25 areas are the emerging areas, where people are searching on. Like, I will tell you one more use case which we try to do, like Google Trends, right? You can figure out who is searching for loan, and you can go and find out more granular data that from which area a lot of inquiries coming from working capital loans or SME loans or personal loan. If you see that trends data, like it's a very unstructured data, but if you try to figure out that from a small location, what kind of loan demand is coming. Now this data is helpful, like if you're working in an offline setup, then of course you can go ahead and give this to your sales team. If you're working in a digital setup, you can give it to your performance marketing teams, even social media teams to run a lot of campaigns. And we have seen excellent results out of it. Another thing, like is the collection. He talked about non-contactability, right? Now a lot of sourcing is based on an app. And you keep on getting a let-long data, right? Where customer is moving and on, and again with consent, right? Though there is a DPDP bill on the table, a lot of things may change, but still you can help giving an app to the collection team. So, and there are products around it you can build where you can track the performance of your collection team, as well as you can use this data to pinpoint where the customer is. Because a lot of times if you see in this STP journeys, no one asks for the current address proof. They only fetch the data from, let's say, DigiLocker or OKYC, and how many of us have updated our Aadhaar, right? Still on my Aadhaar, my hometown address is there, and I'm living in Mumbai since last 3 years. So now when you use that let-long data, try to, use that and pass on to collection team. So we have seen by passing this information, you are enriching your collection teams to improving your buckets. Another area is fraud, right? From let-long, you can create a lot of let-long clusters by using this let-long data and say that, okay, these are the cluster. There are areas in some of the states where we have pinpointed that this is where it is originating from. So in summary, I'm saying, people used to talk about pin codes at a broader level. Now people are going as granular as a grid level. Like 2x2 grid, यहाँ पे कितना business हो सकता है, यहाँ पे कितना collection हो सकता है. So I think a lot of fantastic things are happening in that particular way. Yeah.
Thanks, Arihant. Subrata?
See, in some cases you have to find the use, like making that data available to the salesperson so that he becomes more productive. But in other cases, actually there is no choice. I mean, if you have 15,000 universe where you have to go and target how you can be more productive is a very good objective. But if you have to process 50,000 applications every day, and those applications are 20,000 rupees loan, you really cannot put human. And also those loans has to be decided instantly.
Correct.
So here, analytics is not a choice. I mean, it is way of doing the business. I mean, there is no way, there is absolutely no way that a viable business can be done 50,000 application of 20,000 rupees loan by human being. It has
So it's a given.
So all this growth we are talking about, I mean, growth, business, risk, analytics, collection, it has to be done like, that way only. I mean, someone is applying, you have to look at, like, the way he was saying, like, from the lat long, you can get a lot of data. Actually, from lat long, you can get 2,000 variables. I mean, concentration of ATM, concentration of restaurant,
Speak into the mic.
Concentration of, I mean, like, even income, like, so suppose if you know the lat long, and from that lat long, through the satellite picture, you can know the dwelling. I mean, if it is a multi-story or what kind of building it is. Also, you can know that, like, from that 20 to 20 or 50 to 50 grid, from that lat long, how many Vahan registrations are there, what is the average values of those cars. You can also see, like, the payments which are happening, how many are happening from that lat long, and you can get a very reasonable estimate of many things coming from this data. So the point I'm saying is that, in some cases, you will have to find the use case of analytics. In other cases, actually, there is no business if there is no analytics, if there is no data.
Sounds good. For particular kind of lending, this
absolutely. And actually, I will extend this point to say that, I mean, I'm not going to the corporate or large businesses. Still, I think, like, they will be dealt with a lot of expert knowledge. Otherwise, there is no expert knowledge. I mean, data is better expert than anyone else, like, if you have to do the retail business.
Sounds good, sounds good. Subrata.
Sure, thanks. Again, interesting points made. From my perspective, I would look at growth analytics in broadly in 3 buckets. I would say the first bucket is analysis of the target market. Market means the geography. And of course, we have heard points on what are the customers in a specific location, specifically relevant for distribution channels which are focused on catchments. So the kind of questions we ask ourselves.
Can you speak into the mic?
Sure. Better?
Yes.
Yeah. So the questions, so we are talking of the market, analytics of the market. And the questions we ask ourselves are, is this place right to open a branch? And is it rich in business opportunity in 100-kilometer radius? If so, then what are the ways to take the branch to break even, and then from break even to profitability? These are the questions to ask.
Okay.
I think the second part is the customer-centric analytics of the needs of the customer. Again, from the way I see it, from an SME lending standpoint, does the customer want a working capital loan? Does he need a quick loan to cater to a large order? Does he need long-term capex to set up his business? These are needs. Mm-hmm. And needs are mapped to products, and it leads to the broader cross-sell framework, which is a big body of work. And I think the third part of the growth analytics is focused on efficiency and productivity of the workforce. So it can be productivity of the distribution workforce or the credit assessment workforce from a lending standpoint, and targeted at optimizing those metrics. So I think is a large body of work where many activities that we do falls into these categories. And I think from an organizational standpoint, when we are trying to use analytics to drive growth, we are basically trying to identify the right strings to pull in any of those buckets.
Sounds good. So I think all of you have presented some variety of opportunities that analytics can be used for. Some cases it's a must do, it's a must have, there's no choice. Other cases, I think I can see a lot of ingenuity and innovation in using the data. You guys have also talked about making it meaningful using technology and not just a PPT. So thank you for all that. My friends from the audience, do you have any questions for our panelists? Anything you would like them to expand upon or to talk about? Yes, please. Can we have the mic here? If it is to a specific person, or if it is to everyone, whichever way.
Good morning. Generic, anyone would like to have a go at the particular, I would not say it's a question, but a thought and a perspective is solicited. My name is Vijay, heading business development with OneRoof Technologies, and have been a retail banker for 18 years. Right. Coming on to the point of data, is data a function or a challenge of regulation, mindset, and application? Your thoughts on that?
Very interesting.
First, data is not a challenge, it's an enabler. So I would always like to think, like, it's not I am thinking, I mean, people are saying data is new oil. So I have no contribution to it, just that I believe in the same way. And it will be useful to you in all varieties of ways. Like, I mean, it will be, if you are dealing with regulator, if you have all your data in a very clean manner, regulator will be happy. You have credibility with regulator. And having credibility with regulator in this business financial services business is huge positive. The challenge when you think, I really think with respect to the tech, because a lot of financial services companies which are established and big today, they have tech implemented 15, 20 years back, and once you are into something, keep upgrading it, and how much you can upgrade is a challenge. So new age companies, those who are born in cloud, not on earth, not dealing with servers and all, I think if they have willingness and they have capability, they have some inherent advantage. A lot of suppose if someone is running their banking, core banking on Finacle, a lot of log or saving of log they cannot enable because the system will not perform well, in different branches, transactions will become slow, they cannot do that. But this new cloud technologies where auto scaling, those things are possible if you are having new technology, capturing of a lot of data and information which can be much more useful. Just saying, we capture every time so what has been traditional way of sending the dashboards to people through the email, you really don't know how many people are seeing or not seeing. But now a lot of people are having their dashboards on Power BI or Tableau. They can actually see that what are different clicks people have done, how much time they have spent, which graph they are looking at, not looking at, what is being useful, not being useful. So a lot of benefit if people are adopting new tech and they are able to adopt.
I like that, analytics about analytics. Yeah. That's nice.
Sure, thank
That's
you.
insightful.
Just one point to say, mindset still a challenge. I'll honestly say this. You raised a very good point actually. Mindset across all the teams need to change. And I think some gentleman had said that analytics sometimes thinks as a central team, right? Who is there to provide data, right? I think that mindset across the teams are changing. Very encouraging, but still I think it needs to be changed. That's the limited point on mindset I wanted to make. Yeah,
I just want to make one more point. Mindset, it's so important, so important for an org to absorb something new. I was working with an NBFC long back, and we built an application, a credit application, which the field team can use to quickly decide on the application. But no one was using it, right? It was backed by data science and analytics. No one was using it. So I went to the field. I went to Jaunpur in UP and asked the guy that you are processing this application. Why don't you use this app? This will tell you whether to approve, what kind of limit to assign. And the answer I got was, "Sir, mujhe mat sikhao. मैं 10 साल से कर रहा हूँ." Right? And that is when I realized that sitting in the headquarters, you cannot drive these solutions in the field. The field team has to see value in what you have delivered, and only when they see value, they are going to adopt your solution. Otherwise, they are not going to do that. And after that, we started doing that.
And that's where you made very important point. You went. How many BIU people or data science people are traveling to the field? And if you are not traveling to the field, sitting in AC room, you are thinking you will create a solution and everyone will start using it. And God helps you. I cannot say anything more.
Friends, we are actually now coming to the end of this session. We started a little late, so we have to make up. Thank you all very much for your immense contribution on this topic of discussion. I'm sure all of you took back some valuable insights and innovation ideas for you to apply in your organization, in your work. Really appreciate all of you for this first panel discussion for today.
Thank you so much for sharing your knowledge with us. Can I please request you to remain on stage for a few more moments? And now I would request Manoj sir to please felicitate our wonderful panelists. Can we start with Mr. Markandey Upadhya, Mr. Manoj Sushantam, Mr. Virendra Pal, Mr. Subrata Das, Mr. Arihant Jain, and Mr. Ratul Paul. Ladies and gentlemen, let's have a huge round of applause for our wonderful panelists. Can we please have a group picture?